Hello, and welcome to the Power of Integrity podcast, where leadership aligns with principles. I'm delighted this morning to have Gary Howard, managing partner at Howard Kittle Company, forensic accountants. Gary, welcome.
Thank you. Thanks for having me today.
It's wonderful having you on board. This is going to be a lively and wonderful discussion about integrity and integrity in the world of forensic accounting for sure. Maybe, Gary, you can tell our audience a little bit about your personal and professional journey that's led you up to where you are today and what's going on in your company as it stands.
Thank you. Our firm has been handling accounting matters for over 40 years. Probably the last 25 to 30, we have specialized in forensic accounting, defining forensic accounting as assisting clients at their probably some of their lowest points of life. We assist attorneys who represent our clients, mostly white collar criminal attorneys, assisting their attorneys in defending and preparing their case for matters, whether it's a trial or a plea bargain in the areas of tax evasion, money laundering, banking violations, political corruption. So we have the opportunity to deal with people that have lost their way at some point in their life and now face the consequences of it. And so we started many years ago doing traditional accounting, and through a lot of fate and matters that we dealt with, became specialists in this area and have practiced for close to 40 years myself. My office is very seasoned with 4 other CPAs that have been with me a minimum of 10 years, some in the 20-year range, including my partner Kittle, which bears our firm's name. So that's primarily what we do.
Gary, for our audience who may not have a rich understanding on kind of the subtlety difference between traditional accounting and forensic accounting, can you do a deeper dive and kind of distinguish the aspects of forensic accounting as they might relate to traditional accounting?
I would love to. I have taught forensic accounting at both the Cal State Fullerton and Chapman University, and I open every class with define what a forensic accountant is. And students will read and they will raise their hand and give a very academic definition of a forensic accountant. And I love my response to them that there is no such thing as a forensic accountant. You're either a good accountant or a bad accountant. Now, what forensic accounting is determining or reconstructing records, reviewing records, and determining issues, whether they are issues of financial assets that are undetected, overstatement or understatement of assets, income flows, and reviewing basically records or reconstructing records to determine what the correct numbers are. So forensic accounting is a deeper dive, but generally a good accountant can do forensic accounting, but most do not like to take that deep dive or deal with individuals that are having these type of issues or problems. It can be divorce, which my office tries not to get involved in marital matters because the emotional stress of marital matters leaves very little towards reasoning. We like to deal with determining tax issues, whether people have underreported their income, whether they've provided disbursements or monies to people in various ways that should not have received those funds. And what we do is we get hired by the attorneys to review the books and records, to work with the client so that the attorney is versed exactly what has transpired and what issues lay ahead. So as a forensic accountant, we're constantly reconstructing records. which may be starting from bank statements or invoices or none of the above, trying to find records to determine what an individual has earned or has not properly recorded.
Now, you had said a little bit earlier, through mostly fate, that you started to migrate into forensic accounting. Uh, but tell me, what, if anything else, inspired you to move in that direction besides the fate aspect?
Actually, witnessing many, many years ago, probably 25, 30 years ago, a client of mine was embezzled funds from their bookkeeper. And it's one of those things that was very apparent, but was so clandestine that the obvious wasn't realizable. A lot of times in embezzlement cases, it's an individual that is the closest to that person, maybe the long lost aunt or the person that claims to be their aunt or the motherly type. People that or build confidence with individuals are the most likely to be the individual that could uh, do or proceed with some type of criminal activity against a person.
Is it obvious that there's a, tell me about like kind of the breadcrumb trails or the clues that are left behind, or the fingerprints that you see, the metaphoric fingerprints. What tends to stand out when you're reconstructing, that you say aha, or you get that aha moment? Because I'm suspecting an aha moment happens at some point.
Well, what is aha moments, which is characteristic whether you're dealing in determining how much was stolen in an embezzlement or reconstructing an individual's taxes to see how much they've underreported income, or money or banking violations where you see money being deposited in increments under $10,000 or structured to the bank to hide reportability. One common ingredient is characteristic of every case that I get involved in, and it's the word greed. People, greed leads to some of the most, uh, uh, as I've written, the deadliest sins, the total loss of integrity, the impairment of judgment. It is greed that is the number one indicator. So what do I normally look for? I look for things that don't make sense. What doesn't make sense? Someone in an occupation that we all know have a relative idea of an income level, such as a let's put a big title, a chief financial officer of a very small company under $5 million of sales. So I can gather that probably an income level of someone like that would be anywhere from $100,000 to $200,000 a year, plus a nice 401k and medical insurance. And you see them living in a very upscale neighborhood with a very large home, with a beautiful vehicle, and you ask yourself, how did they get there? Now, you may say, all right, don't be prejudgmental. Maybe someone that has inherited money or received gifts or hit the lotto. Maybe someone that hit the $1 billion lotto this last week. But the real true reality, for the most part, is that lifestyle and means normally should be indicative of a person's income level. And when it isn't, then that is a suspicious activity. And that is my number one, what I look for: greed, lifestyles that do not compare to income levels. And those are my first steps of reviewing a particular issue.
So Gary, it seems like it's inherent in your day-to-day job and work that you're finding and uncovering lacks of integrity or lapses in integrity. And I'm curious about a few things. One, I like to hear about some of the, I think it'd be put a lot of meat on the bone if you can tell us a couple stories without breaching any confidences about some of the most egregious lacks of integrity. And then I like to flip to the other side when we get a second and talk about how some of those folks may have actually shown up with integrity. Would you mind sharing both sides of that coin for us?
Good question. I face integrity every day, and the my favorite question as an accountant, because we do some tax preparation, we do some traditional work to not only sharpen our skills, because you need those skills working on the forensic cases, but sometimes it's nice just to be with good, wholesome people with a lot of integrity. It's a refresher to your day. But I get this question, and I get this question very often on a weekly basis for probably 40 years. How's anybody going to know? And that is the basis of our tax system. Remember, our tax system is voluntary. And well, it isn't voluntary. It is, though, dependent on people voluntarily being truthful and honest. And when people aren't truthful and honest, you have issues. And there are a lot of people that work in the underground economy that will be paid or receive cash or currency, which is taxable, whether you receive cash or currency, check, cryptocurrency, whatever the case may be. Income is income. But I'll be asked, how are they ever going to know I was paid cash? Well, you know that you were paid cash. And I had a very brilliant tax attorney by the name of Bruce Hockman, who his son is now the city attorney for Los Angeles, Nathan Hockman. But he once told us as young men, I was sitting on a case and someone said, who's going to know? And he gave the best answer I ever saw from an attorney. And he said, and I will clean up his comment, but he said, who the heck knows? And that's the thing. No one really knows how things are discovered. It can be an ex-wife. It can be your current wife. It can be a family member. It can be a happen chance of someone that you're associated with. And so I spend most of my days, who's going to know? The most outrageous case well, I won't say the most outrageous, but the case that brought me to the forensic accounting world was that my client, their controller at the time, very nice lady, very warm lady, used the corporate automobile, the corporate gas card, and she struck a deal with the local gas station to do repairs on vehicles using the company card. She took that company card, went into church on Sunday, and told the church that we've been blessed by God. We have a mechanic that's going to work on our cars and fix all of our cars for a very discounted price. All you need to do is pay me. We'll deliver the car to the gas station, and the gas station will repair the car, return the car, and you will receive a blessing from God. Well, she rolled up close to $200,000 of automobile repairs at this gas station on the company credit card, leaving that for her current employer to pay. So behavior can be egregious. I've also had people that have stumbled into the hell that comes from their let's say their crime being discovered, going through the legal process. And I've seen a lot of people that have become that come in this office that are very sorry that they did what they did. I still get a lot of people that are not sorry for what they did. They're sorry they got caught. But there are some people that come in this office that know they've done wrong, try to make it right, pay the fines, which can be as incarceration, come out and become not only decent taxpayers, but actually learn a lesson. And I have a lot of them that are my clients after 40 years that we're proud when they're audited. There's very, very little change, if none, because they have learned that taking the straight path and having integrity when they deal in their financial affairs makes a big difference, because no one wants to worry when they go to bed at night what problems may ensue.
Yeah, Gary. I would ask our guests early on kind of their notion or what the word integrity means to them. But when you think about it, how do you define integrity?
I define integrity. It's one of my favorite words, and what makes it my favorite, and I've told my kids that I have some youngsters that are in their early 20s. Integrity is simply doing the right thing. And people say, well, some people get mixed up and don't know what the right thing is. I believe that most people know what the right thing is. They know how to act correctly and how to behave and deal with people as if they would like people to deal with them. And with that in mind, I believe that people know what integrity is, and doing the right thing is a very easy thing for most of us to define. The problem is that there are a lot of variables out there and pressures that cause people to be swayed and not do the right thing.
Yeah, and the students that are coming through your classes and classrooms you're teaching there at university, what what do you gauge? Are they likely students with good, strong commitments to integrity, trying to figure it out, or there's a smattering of, like in the general population, those primarily with integrity and a few without? Well, how do you see those coming through your classroom?
Uh, One of my favorite stories is I once started a lecture on how to steal $500,000 from a charity, move it offshore, hide it in a foreign bank account, serve your time, and return back to society and take the money and go. And I'm watching this as I'm explaining. I'm getting very detailed, which is kind of scary that I would have an idea how to do that. But I promise you, I would get caught. But I'm lecturing, and I'm looking, and there's like 4 students taking impetuous notes, and the other 26 are just looking at me. Is this guy for real? And so I always end that conversation is, if you could get away with it, why wouldn't you do it? And it amazes me because they all look at me because they're in class and they don't know what to say. And I always tell them, because it's wrong. That's why. That's the underlying
Right?
principle. It's wrong. But I can tell you, of the 4 students that take notes, they're taking notes to figure out how to do this correctly. So pretty much today's generation is, I'm not going to say they're worse or better than past generations. It's the same 3 or 4 people that do the wrong thing, and 26 people try to do it right. And thank God for all of us.
Yeah, it's interesting. So I was wondering how that math was going to work out at the end of that calculus.
Remember, I am an accountant, so I am trying to keep that percentage to under 10 or 15%, because we'd be in trouble if we start cracking the 20% range. But
Oh my gosh, yes. Interesting enough. But when you think about the folks that have made that transition, they've had their acts of contrition and they have switched back over from the mindset of, "Oh, maybe I could have gotten away with it," or I knew it was wrong, but I had to do it for the greed. Or I had, people put them desperate times call for desperate measures. Many times we hear, but tell us about the people who have had the conviction, they've had that change over, and what you see in them that's different in their commitments to integrity.
I think they find the path. What I see is the same path that they started on, that they fell off of. I think there's a lot of relief when they deal with these issues and they're behind them. The biggest grief is not as much the money, meaning that it's a lot of money and it leaves, it's 3 to 4 times what they would have owed if they did things right. But the money doesn't necessarily break them apart. The incarceration, believe it or not, doesn't destroy them. I had one client that ended up a heck of a gardener, working on the prison team, maintaining the warden's yard, and said, "Hey, when would I have ever had time to grow a proper rose or trim a tree properly?" He says, "It actually was fantastic. It cleared my head, although I wouldn't recommend this for anyone." But the biggest thing that I do see is the embarrassment. Not the embarrassment as much to their friends, although it is embarrassing. It's individuals that have to face their family, their children. It's very demoralizing. I went to a sentencing of my client who had or has plenty of money. Good, actually, a very good man, given just immense amounts of money to charity, given time to his community, helped the person that no one would help. Just a great guy, but greed got him, and he basically felt that his decisions to do with his money would be much better than the government's decisions to do with his money. So greed got the best of him. But the sadness, and I worked with the client and fought this case for 5 years. At the end of the day, at the court sentencing, he was sitting there, and his kids, and he has 4 kids, probably age 35 to 45, grandchildren who weren't there, but the kids were there, and they're just crying, and the client is pleading mercy from the judge for all the good things he did. And the judge was, I wouldn't call it lenient. He still sent him to jail for 18 months, said, "I know all the good things you did or do. I know that you've owned up to what you've done and you've paid the United States every dime. But it isn't fair to someone that doesn't have the resources, such as you, to fight a case. I have to be fair to all individuals. I'm a federal judge." And I was saying, man, that makes a lot of sense as I'm watching my client go away. But I said, yeah, that does make some sense. But to watch the grief of his kids crying and the pain he put them through, I think that was probably the worst part of this journey that he took. And God bless, he gets out actually tomorrow. He served his sentence. So, and I look forward to seeing him. Great guy. And he will, I promise you, operate within the realm of impeccable integrity.
Yes, course corrected along the way. Well, for those folks who are our younger audience who are starting out in their careers professionally, whether it's corporate, whether it's their own entrepreneurial endeavor, whether they're in the nonprofit arena, Gary, what would be some of the insights you have learned over the years that if you wish you knew when you were a youngster, or some of the things you knew as a youngster that helped in your trajectory and acted as accelerants? What could you share with them as kind of the inside tips?
I think my favorite tip was given to me from my first boss. I was 23 years of age. And believe it or not, he's sitting at his desk today. I think he's 95, but he works a full schedule still. And he told me as a young man, when you're young, don't let money influence your decision. And that was stunning because everyone would say, well, what is he talking about? We want to maximize our income. We want to make a lot of money. When you're young, I would tell all young people, and I tell my own kids, you're there to learn. You're there to gain experience. You're there to build a set of values, a set of morals that are going to be your foundation for years to come. And how that works is at my ripe age of being in my 60s and still to this day working, representing people that have lost their way, I still to this day do not, I've been fortunate, never let money bias my decisions. I've never taken a deduction for a client when I've done their taxes that is wrong, that I don't have a position in, because I know what will happen. And regardless of what someone is going to pay you or where it may lead in the future, which it is true, most people get caught or stumble on their feet. Don't let money influence you to the point where you make a biased decision that could be harmful to you. And most importantly, build relationships with people. That's the proudest thing that I have dealt with, or that I've found being in the business I have been in, is that I've built some wonderful relations with people, their families, and it is very rewarding to have those relationships. So I would say, number one, don't let money influence your decision. Number two, build the foundation and the moral compass as a young person, because it will guide you throughout your career. And then most importantly, stay steadfast on your goals and move forward as best you can.
We've been having a wonderful conversation with Gary Howard of Howard Kittle and Company Forensic Accountants. Gary's the managing partner there. Gary, if folks, as we get close to rounding the corner here and coming to the close of our show, if folks want to get in touch with you, what's the best way for them to do that?
Well, they're always free to give me a call. My cell, 310-990-9993, or reach out via email, Gary, the @Gary at glhowardcpa.com. My nickname is 711. I am open from 7 a.m. to 11 p.m., 365 days a year. So when trouble or problems ensue, which I'm hopeful that people will call me before they do something that can lead to a bad circumstance, feel free to call me anytime.
Wonderful. It's been great having you on the show. For folks out there listening who'd like to be on the show, the Power of Integrity podcast, as an entrepreneur, as a professional leader in your community here in Southern California, reach out to us. You'll find us on Spotify, Apple, and various other YouTube channels. Again, Gary Howard, it's been a delight having you on. Thank you so much for coming on the Power of Integrity podcast, where leadership aligns with principles.
Thank you for having me.
It was a great joy.
The information presented in this program is provided for informational purposes only. The information is believed to be reliable, but no guarantee of accuracy is made or implied. Expressions of opinions are as of this date and are subject to change without notice. The information in this material is not intended as tax or legal advice. Please consult a legal or tax professional if investing involves risks, including possible loss of capital. Ralph Adamo is registered with the securities and are offered through Kovac Securities Inc., member FINRA, SIPC, 6451 North Federal Highway, Suite 1201, Fort Lauderdale, Florida, 33308. Telephone number 954-782-4771. Investment advisory services are offered through Kovac Advisors Inc. Integrity Wealth Management is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc.